But let's cut across now to our managing editor, Shireen Pan. She's at the CII Global Economic Policy Summit. She's in conversation with some of the biggest names from India Inc. Shireen?
Welcome the viewers who are watching this at their homes on TV. Gentlemen, thank you very much for joining us here this morning. Mr. Kotak, as I said, let's address some of the near-term issues, some of the short-term issues before we go into the medium and the long-term. I want to start by asking you about what you make as far as the interest rate trajectory is concerned. The MPC yesterday delivering a 35 basis point hike along expected lines, but the commentary also taken in by the market seems to suggest that the RBI is very firmly committed to bringing down inflation at this point in time and bring it within that MPC band as far as the inflation range is concerned. Do you expect another rate hike in February, or do you believe that if it is a rate hike in February, that will be done for now?
So, Shireen, I think the governor has spoken yesterday, and he has said that he will be data dependent. Therefore, we've got to take him at his word. And my sense is we've got to wait and watch for what happens to the Fed in December. I think that's going to be a very crucial signal about what is the interest rate trajectory in the largest market and the largest pool of money in the world, which is the US. At the same time, I think we need to watch the Indian situation. The target for RBI is 4%. And if you read the press interview where Michael Patra spoke, he said that we want to be within the band first, yes, and then towards the target. Therefore, based on that, my sense is there could be one more rate hike, and that may be the time for thinking about a pivot. But we got to watch very closely the data, and maybe around 6.5, as it looks today, subject to what happens to the world, subject to what happens to oil, subject to what happens to many, many other things. And based on that, I would say that at this stage, maybe 6.5 is where there could be a time to pivot.
Okay, a time to pivot at 6.5, and you talked about several factors that the MPC will have to consider. The good news, though, is that at least as far as oil is concerned, we've seen prices come off quite sharply, below $80 a barrel at this point in time. Sanjeev Bajaj, I want to understand from you, in terms of consumer sentiment, in terms of demand, India has been resilience versus the world. At this point in time, with rates moving up, are you starting to see any signs of that impacting consumer sentiment or consumer demand? Or do you believe that it's still holding strong?
You know, Shireen, if you look at the last few years and the effects of the pandemic, what you've seen is a two-leg recovery. You're seeing on the consumer side, the middle class, the upper middle class, that actually saved a lot of money. Most people did not lose jobs. Maybe they didn't get a big salary increase, but they didn't lose jobs. And we are seeing increasing spends. So if you actually see televisions, refrigerators, mobile phones, the more expensive ones are selling more. On the other hand, if you look at the low middle class, that is where you've seen much higher stress. And that's where we see a big drop in consumption. So that's one clear change that we are seeing compared to pre-pandemic. Second is that the government supported rural India significantly through the pandemic, as was expected. Some of that support is starting now naturally to come down because the government also has to balance its books. As a result, some slowdown in rural demand is also visible. So at this point of time, and I think it's as is reflected in the economic growth as well, and as projected by what RBI has indicated in the next 2 quarters as well, you're talking of 4.2, 4.1% growth. So you're going to see some amount of moderation there in the short term. On the other hand, everything that the government is doing, India is doing to build new capacities, to look at becoming the manufacturing base, the China +1 strategy, has at least significant medium-term promise, but we have to execute naturally towards that.
You know, on the medium-term promise, I'll get to that in just a bit, but on this business of private capex, and I think it was at a CII event, or at least an industry body event, but the last time the finance minister once again asked Indian industry to go out there and invest and gave the Hanuman analogy. What are you waiting for? Why don't you recognize your own strength and the opportunity? Has that message now resonated deeply with industry? Are we likely to see any movement on that front?
No, not only the message. Let's give credit to the government for a continuous and consistent investment from their side in public infrastructure. That is really what has helped us over the last few years. Private sector, we are starting to see investments in the last few quarters, whether it's in real estate, construction, logistics, chemicals, some of those sectors. But there are many other sectors where there is still excess capacity eventually private capital does have to earn a particular return to justify that investment in capital. And that's where I think it's more a short to medium term window that we're looking at for private capital to come back.
Sanjeev Puri, let me address the question both in terms of demand as well as private capex. As we just heard there from Sanjeev Bajaj, some impact continues, at least as far as the consumption side is concerned, when we talk about rural economy. And that has been the story for the FMCG industry as well. What are the trends that you're picking up? We're almost at the end or the last lap of 2022. What is the outlook for 2023?
So I would say that, first of all, it kind of mirrors what Sanjeev just alluded to. In the FMCG segment, we are seeing both the trends of premiumization, and at the same time, there's a lot of value-seeking behavior, and there is a stress at the lower price points, right? So it's the same reflection that is there. We are, of course, seeing India do much better than what the rest of the world is witnessing. And I think as far as consumption is concerned, the main stress point has been inflation induced, because prices of a lot of products have gone up at a percentage that probably in the prior periods would have taken 5 years to go up by that kind of, it's all gone up in double digits. That's a phenomenal amount of inflation. And that's the reason why FMCG consumption volume growth in rural is a lot more muted. Of course, volume growth is muted across. The bulk of the growth is inflation-led, but there is some, volume growth also. Now, however, my sense in rural is that it is going to get better, because the realizations have been better. The costs are also up, but net-net, I think it's better off. But there will be certain regions that are going to be more impacted, and that's more to do with the distribution of rainfall and the impact of the receding, the untimely rains have caused in certain areas. So certain areas will be under stress, but overall my assessment is that it is going to get better over time. Inflation also, as far as FMCG is concerned, it's cooling off a little. Coming to the second point about private capex. Yeah. Now, see, the macros for investments, I think, are pretty good. If you look at, the availability of funds, the corporate income tax, better balance sheet, so all these are positives. Earnings also are on a better trajectory. The issue really comes to is about capacity utilization, which is also picking up. But there is a serious amount of global uncertainty. Yeah. And there are serious headwinds on exports, so that's going to dampen sentiment. But I can tell you that for companies like ours, which are very domestically focused, I think that private capex is continuing. We've already done, and some more is in the pipeline. So for domestic oriented, I think it's an ongoing process, and it's happening.
Okay. Mr. Kalyani, let me address both the domestic market as well as the global environment with you, because you have a pulse on both, especially in light of the government's move to, at least as far as the defense manufacturing is concerned, to indigenize much more. You've got the third list that's now already out, and the uncertainty as far as the global environment is concerned. How is that likely to shape things over the next 12 to 18 months?
Well, I think the challenges in the global environment, which all of us know, the war in Europe, the challenges of the China +1 strategy that many countries are facing and trying to figure out, and the challenges of creating a resilient supply chain. You go to any place, anywhere in the world, you will hear this word, resilient supply chain. What is a resilient supply chain? I think in the manufacturing world, this creates huge opportunities for India, including in defense, by the way. But there are pockets of opportunities where things are happening at a much faster pace. I'll give you the example of railways. The railways are undergoing some tremendous modernization. Just day before yesterday or yesterday, a tender was out for 1,600 locomotives of 9,000 horsepower Siemens was the lowest bidder, 20,000 crores. It is all supposed to be produced in India in an Indian plant. In one more week, there's a similar tender out for 9,000 horsepower locomotives, which is going to come out, and then 200 Vande Bharat trains, and then 100 high-speed trains. Now, this is the kind of initiative that Mr. Vaishnav has taken in his ministry to create industrialization of the railway manufacturing system, which was somehow embedded in the last century for many, many years. And overnight, this is going to get completely modernized. What took Europe and America 50 years to do, India will do in 10 years. And this is going to create a huge manufacturing ecosystem, especially in the area of electrical equipment, because these are all electric. We have, as a policy, Indian Railways have moved from diesel to electric, as you know. The same thing is happening in defense. There is a whole slew of policy changes that have taken place in the last 3, 4, 5 years. Everything is focused on Make in India, and more than Make in India, focused on what the Honorable Prime Minister calls Atmanirbhar Bharat. And his definition of Atmanirbhar Bharat is very clear. Atmanirbhar Bharat means something that you produce with your own intellectual property. If you got a technology collaboration from some company, no matter which part of the world they come from, and you want to export that product into, not into a conflict zone area, but even in a non-conflict zone area, you won't get permission to do it. But if it is your own product, where you own the technology, you will get it. If the Defense Ministry starts doing what the railways are doing in terms of creating this large industrialization capabilities, then I think India will have a game-changing situation in manufacturing for the domestic market also. Because when you do, whether you do railways, whether you do defense, whether you do automobile, it's not just that industry that you're dealing with. You're creating a whole host of new technologies which have usages in many, many other areas. And that creates an ecosystem, that creates skill sets, that creates capability. So I'm very confident that that sector is going to do well.
Both railways and defense. You held up the railways as an example of things moving very fast. Defense not fast enough?
Not fast enough yet.
Not fast enough yet. Janmejay Sinha, let me address the issue of the India story and the strength of the India story. Practically every interview that I've done in the last few weeks, whether it is with a domestic CEO and more importantly with the global CEO, everyone's talking about how this is going to be either India's decade, if not India's century. I don't want to go down the century road, but let's talk about the decade that we are dealing with at this point in time. What do you believe are the areas where we have enough momentum to push us forward, and where do you believe work needs to be done?
So if you just look at the world, Shireen, if you take five blocks, the US is about 22 trillion, Europe is about 17 trillion, China is about 16.5, 17 trillion, Japan is 5 trillion, and UK is 3 trillion. Look at each of these countries. The US has a very, very complex situation, that it has inflation which is higher than India. I don't remember in my living memory when this has ever happened. And the Fed is driving up interest rates to bring about a recession. I mean, the decided goal is to bring a recession. Europe will slip into a recession in a month or two with very high energy prices and with a complex situation that it's importing inflation because of oil prices, and not the US situation which has had $5 trillion of stimulus. Then you come to China, which is decided that, it's had enough of a run, and only thing that Xi Jinping wants to do is consolidate power. And so I hope he continues to consolidate power and create opportunities for India, because they are really have self-inflicted a goal which they are trying to unwind, and they're going to have a very hard time unwinding. Japan, the yen has gone down to 140. It's still not raised interest rates. So it's in a complex situation, and it's aging very rapidly. And UK changes its prime minister every 10 days. So, if you really look at that context, India is a beacon of stability, which has a fiscal balance which is coming about. We have some headwinds and we have some tailwinds. But overall, everybody who looks has to say, if you have a country, which we will be the largest country in the world in terms of population, we have started to grow. We have started to have a market size, you know, what I call the Indonesia of India. So if you take 50 million Europeans, 400 million Indonesians at $10,000, that in itself is very attractive for the world. And then we have, yes, oil prices going up, but if there is going to be a recession, the oil prices will moderate. Interest rates, you know, we will have a little bit of a tough time with that. But if you look at the MSCI index, it has taken us from 7 to 14.5%, and China has been brought down from 36 to 29%. This means serious amounts of dollars are going to be coming towards India. What do we do with it? That's the question. We have some constraints which are there, which have to be addressed. But how do we take advantage of our many trends that are there is going to be what it will be on us. So if we don't take this decade, the only people we should say shame on is us.
Well, yes, I would imagine that that is going to resonate well with the audience that is listening to you. But Mr. Kotak, let's address this issue of India versus the world at this point in time. The next big policy event that's coming up is Budget 2023. Now, industry has presented its recommendations, a usual list of recommendations that go in year after year. But if we were to talk about the budget in the context of what's happening in the world, whether it's China +1, it's re-globalization, it's supply chain resilience, what do you believe thematically the priority areas should be for Budget 2023? What should the theme be for Budget 2023?
You know, Shireen, I just want to step back and actually bring some reality.
Okay.
And I think there's a lot of good news. There's a lot of opportunity as has been rightly highlighted. But I just believe that we need to set our goals and then execute to the goals. Therefore, as Janmay mentioned, we are now the 5th largest economy, around the size of UK, on many days bigger than UK, on some days around that. So that's a great achievement. The first goal we must set for ourselves is, what does it take for us to become the top 3? So that is, and how do we get there? And in that context, obviously, absolute GDP does matter. And for us to be in the top 3, we will have to, from a 3 trillion, think about a number which is double-digit at least.
Yeah.
Okay. And we can figure out the time frame within which we need to do. So we are a long way from top 3, but a lot of work to be done with focus. The second important point is we have to keep the reality check that we have a denominator challenge, which is 1.4 billion people. A UK has 68 million people for a 3 trillion economy. For a UK per capita is $47,000, India is 2.5. And I think if we want to become world class, we should get out of this mindset of PPP and other things. Let's now compare ourselves with the best in class, dollar to dollar. And what does it take for us in the next, say, 10 years to think about a per capita GDP which is as close as possible to $10,000. At $2,500, even if we double it at 7%, it gets to 5 in 10 years. We need to go faster in dollar terms. So let us work towards absolute top 3 and per capita to move to a serious middle income country with a 10,000 per capita. And I think Baba and Sanjeev, both the Sanjeevs and all of us, we have optimism for India's future. But if we want to be truly Atmanirbhar, we're going to ask ourselves, how do we get better on 2 profit and loss accounts of India? One is current account. Yes, a growing economy needs to have a current account deficit. And we keep on having a current account deficit for a long period of time. But at some point of time, we must be Atmanirbhar. Even this year, we will be $120 billion negative current account deficit. Means our profit and loss account in foreign exchange is we're earning less than what we are spending. Therefore, we need to get Atmanirbhar on our current account. And second, I understand fiscal deficit consolidated has gone up worldwide thanks to COVID. And India is at consolidated, give or take, around 10% of GDP. We need to have a credible, consistent, resilient plan that we will get better on P&L account, even on fiscal deficit. Therefore, total GDP, per capita GDP, and getting our two profit and loss accounts right, and whatever it takes for us as business and policy working together for that clear objective set in front of us.
No, but that's what I want you to focus on now, whatever it takes. So what is it going to take? Let's talk about that, Mr. Kotak. Ambitious goals, audacious goals that you've set out for us in terms of being able to get to $10,000 in terms of the aspiration. But what is it that you believe will take us there? And, what should the priorities be?
I share with the finance minister. People in this room and on this dais need to get our animal spirits up a lot more. And it really is it. Investment.
So what is holding the animal spirits back?
If
you're optimism, you're confident about the growth of the India story in the near term as well as the long term, then what is holding animal spirits back? Liquidity is clearly not a concern.
I think there are a number of factors. First, the global situation thanks to COVID and Ukraine has made a lot of people in India circumspect. In a 24/7 news, if you keep on getting barrage of bad news from around the world, it's got to affect your psychology and your mind. And we are not immune to this. I remember in 2008-9, I took a call. Don't read the Financial Times and the Wall Street Journal. It makes you very negative about the world and you start taking negative.
Only watch CNBC-TV18.
Not CNBC or CNBC.
CNBC-TV18.
Okay. So I think the fact of the matter is 24/7 digital world, what happens around the world affects us. But we got to look at our facts. We did a survey in Kotak of 900 corporates and SMEs recently, first week of November. We found 66% of the companies across corporate to SME having capacity utilization of 80% or more. But only 15% of the total were ready to invest for new capex. So capacity utilizations in many areas are going up, but people are waiting and watching because of perceived uncertainty. And that is where confidence, capacity building, and I think building capacity in each sector ahead of the curve. I think the financial sector, we really need to figure out if we want to be a 5 trillion economy, our financial sector has to be at much larger scale with greater ambition than where we are. And that's true for many, many other sectors. And I'm sure my colleagues here would share. How do we take the bets without fear that, what will happen to the world? What will happen to exports? What will happen to some policy change? What will happen to the regulatory landscape? There is concern in many areas. Therefore, people are uncertain. Let's unwind that and move forward.